What's going on, guys? My name is Arjun and welcome back to my channel. Today, we're going to continue in our series of building a beginner portfolio. Remember, these stock recommendations are just my opinion, and you should do your own research and take a look at your own risk tolerance and overall portfolio to see whether or not they fit into your investment strategy. These are companies that over the next 5 to 10 years are going to outperform the market and produce tremendous returns for you. Before we take a look at the second stock, let's just quickly go over again what are the things that we're looking for and what you should do with these stocks. First, remember we're looking at companies that will outperform over the next 5 to 10 years. These are stocks that are going to be a core part of your portfolio. They should have the following criteria. The first, strong overall growth. Second, profitability or a path to profitability soon. Third, they should be in an industry that is evolving and growing and not a stagnant industry. You don't want to buy a company that's in a dying industry. The fourth thing is that they should have a moat or a sustainable competitive advantage in that industry. So a good question to ask yourself is, are they a game-changing company? Finally, the company should have strong leadership. Leadership is going to be critical for these companies because they're going to set out the plan for the future and they're going to have to execute on that plan going forward. So now let's go over again what you should do with these stocks. The first thing is add to these positions consistently over time. We're looking to use these stocks to build a core part of our portfolio, meaning that over the next 10, 15 years, we're going to leave this core position alone and continue adding to these stocks over time. Also, we're going to be prepared with cash for stock market declines so that we can pounce on the sales that are coming and add to these positions. So what that means is that when the stocks go up, we should be willing to take some profits so that we have the cash to pounce on the sales. And finally, please remember to have patience with these investments. Patience in two ways. First is that don't expect a return from these stocks immediately. You're not going to get 100% gain from these stocks in one day. And secondly, have patience when buying these stocks and remember that there may still be declines in the future and that you should look at those as those stocks going on sale and be ready and willing to add to your positions. Without further ado, the second stock we're going to talk about is PayPal. Many of you guys probably know about PayPal already, but let's talk quickly about what is it that the company does. PayPal offers a digital wallet. So the first thing is they make online payments easy for customers without having to divulge their credit card information. So instead of you having to put your credit card on many different sites when you're buying things online, you just put your credit card information in PayPal and then use the PayPal login to purchase different items from different websites. The second thing PayPal has is the peer-to-peer payments platform, Venmo. PayPal is just in the beginning phases of monetizing the users on the Venmo platform. For example, one of the ways that they're monetizing users is they're offering a way for you to get your money into your bank account faster for a small fee. And they're also offering a Venmo credit card that you can use. PayPal has also recently expanded into cryptocurrency. So while this is not a place where you actually physically hold cryptocurrency, you can buy and sell cryptocurrency on PayPal like an exchange. So in the same way that you buy and sell the stock of Apple or PayPal, you can buy and sell Bitcoin and Ethereum on PayPal's platform. Currently, they have an average of 377 million active accounts and average transactions of around 40 per account. Their new active accounts growth for the year of 2020 was 95%. So now let's talk about their profitability and their growth. Total payment volume was $936 billion. That's close to $1 trillion in payment volume. And that represented a 31% growth year over year. Total payment volume is very important when it comes to stocks like this because that is what translates into the revenue for PayPal. They had a 22% growth in top-line revenue to almost $22 billion in revenue. An important metric for a lot of these stocks is whether or not they have free cash flow. It shows whether or not a company is able to easily meet their monthly dues PayPal generates nearly $5 billion in free cash flow. Now, profitability grew 71% for PayPal, and for a company of this size, that is very significant. Also, let's take a look at the overall industry growth for the e-commerce and online payment sector. As you can see here, the US e-commerce versus total retail sales, year-over-year growth, e-commerce is growing at a tremendous rate. Aided by the pandemic, e-commerce grew nearly 45% in 2020. And looking at the total penetration of e-commerce as a whole of retail sales, they're just scratching the surface. And in 2020, e-commerce represented just about 20% of total US retail sales. So now let's talk about PayPal's moat, or their sustainable competitive advantage. First, they've spent years building themselves as a trusted name brand for people. So when people are shopping online and they see that PayPal symbol show up, they're not afraid to click on it because they know, okay, I can trust PayPal with taking care of this payment. Also, similarly, they invested years in building Venmo as a brand that people knew and trust and used tremendously, without regard for how they would make money in the future. They were willing to take the loss on investing in Venmo because they knew in the future it could produce tremendous growth for them. In fact, I would say Venmo has basically become a verb on its own. And because of the infrastructure that they've built around payments, they can easily handle their new foray into cryptocurrency. They have an infrastructure that many others do not have. So now let's take a look at who's at the helm of the company and who's leading the charge for them. Their current CEO is Dan Schulman. He's a former executive from American Express and the founding CEO of Virgin Mobile USA. The stock price under his leadership has risen 7x in the last roughly 6 years, which is fantastic growth, compared to the S&P, which has done around 96%, so less than doubled in that same time. He works under a mission to help upgrade capitalism and works for all the stakeholders involved, meaning he wants to help allow everyone to have access to the same financial tools. And basically, this is his driving force, so he has a why, he has a purpose pushing him forward. So now, most importantly, you guys are going to care about what has the stock done. Since PayPal came back IPO as a spin-off from eBay in 2015, the stock has performed tremendously well. It has gone from $34 to nearly $240. At one point, it was trading close to $300, and it's currently around 20% off of its all-time high. PayPal has been taken down from its high during this recent tech sell-off, but still the one-year return is close to 148%. As with any other investment, there are going to be some risks that are involved. Because PayPal handles so many transactions, they have a lot of consumer credit card information. So this data needs to be very secure, and security is one of the most important areas for PayPal. Another risk is the possibility that some merchants may find the fees that PayPal charges on top of the already existing credit card fees to be too high. So to accept PayPal, the merchant has to pay some fee to PayPal because they're getting access to PayPal's vast user network. And this is in addition to the percentage that Visa and MasterCard and American Express charge. One final risk I'd like to note is that it's possible that PayPal will start charging for a previously free feature. And this can upset some of their user base and maybe even turn people away from using PayPal. An example of this would be if PayPal limited the number of transactions on Venmo for a free account and instead forced you to pay a premium for more transactions. So now let's quickly go back over our criteria and make sure that PayPal checks all the boxes. First, strong overall growth. PayPal had 31% total payments volume growth, and that translated to a 22% revenue growth. For a company doing the amount of volume that they're doing, that's a tremendous growth. The second box to check is whether or not they're profitable and continuing to grow that profitability. PayPal saw a 71% profitability growth and nearly $5 billion in free cash flow. So clearly they are very profitable and continuing to grow that profitability as they continue to grow their business. The third box is that they're in an industry that is growing and evolving. The online payment space, peer-to-peer payment space, and crypto space are all growing industries and will be a huge part of our everyday life going forward. And PayPal is seeking to offer a solution for each one of those things and trying to be at the cornerstone of that and become a full digital wallet for consumers. The fourth thing is whether or not they have a moat in their industry. Are they a game-changing company? They've built years worth of brand recognition, and they're not afraid to spend time investing for the future, like we saw with Venmo. And because of these things, PayPal has built themselves quite a bit of a competitive advantage because people know and trust PayPal. And finally, do they have strong leadership? Although it's not led by their founder anymore, they have an experienced risk taker, someone who is looking to the future and who is driven by a mission and will continue to invest and grow the company rather than be satisfied with the way things are and try not to rock the boat. Remember, again, this is just my opinion and my recommendation. I think PayPal is a fantastic company and will continue to do well over the long term. My hope for this series is that you guys will be able to find some companies that you like out of the recommendations that I give, and that you'll be able to build a core part of your portfolio using them, and you'll continue adding to them over time and hold them for the long term. Thank you guys for watching this video, and if you enjoyed it and want to learn more about business and investing, comment, like, and subscribe to my channel, and let's head on over to the next video.